You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth Talk about alternatives to Wall Street.
All right, everybody. Hey, Curtis May here. Welcome to the Practical Wealth Show. And I always say I'm going to try to record a short episode, but I keep droning on. But I'm going to try to keep this one concise. But listen, this has been coming up in client conversation. So I figured I would record a little episode. And I want to talk about this episode. We're going to identify the top 10 wealth transfers that are happening in your life right now that destroy your wealth, that keep you from reaching your goals and dreams. See, and so I have been seeing this. I'm going to hit on probably one. There's 10. I'm really going to focus on one today, and we'll hit the rest of them. I've covered different parts of them in our talk, but I want to have one that we've been finding that most people have this issue. And I wanted to kind of share this. So what we're going to do is let's talk about the transfer. So most people are involved in the evolution of transferring their wealth away to those that create the situations, control the outcomes, and profit off of you not understanding the money game. And so when you look at your personal economy, see, one of the things I always tell girls, have this conversation. See, I look at financial services differently. I don't believe that, I don't believe in financial planning the way that has been, rolled out there to the American consumer. Because if it was a science, nobody would lose any money. Okay. So it's definitely not a science. And so there are really three types of money. So think about this now. So draw a little circle, right? And then break it up into like a pie. And so think the first type of money is your accumulated money, right? So that's the money that you have saved, in your savings, in your 401k, your mutual funds, all that kind of stuff. That's your accumulated money. And so that, saving stocks, real estate, all that stuff, 403bs, 401ks, life insurance, cash values. And most conversation that happen in the financial world, if you sit down with somebody, happen around that conversation, it goes something like this. How much you got? We can do better. Why don't you move that money over here to us? Right? But so here is the question. This is funny. If you're getting that type of advice, who is the only person whose money's at risk? Yours, right? Because everybody's guaranteed to make money but you, right? You put up 100% of money, take 100% of risk to maybe make 12, 15% of the profits, if there's any profits at all. Guess who said that? Not Curtis. I told you I don't have no original thoughts. That was Jack Bogle. I'm paraphrasing, of course, from Vanguard Mutual Funds, right? So the founder of Vanguard Mutual Funds, right? So the second type of money is lifestyle money. So that's the money you spend to maintain your standard of living. So that's food, clothing, utilities, entertainment, where you vacation, what you drive, where your kids go to school, type of healthcare you have. That's lifestyle. So conventional wisdom, a la some of the financial entertainers, says that, hey, you've got, they call it the latte factor. You got to stop going to Starbucks, and you got to, you can't do this. I want you to, you got to grow your own food and, cut sackcloths and wear that. You can't go shopping. I'm exaggerating, of course, but it feels like that, right? So raise your hand. Who's interested in doing that? Cutting back on lifestyle. It's America. Hey, what's that video? Ain't nobody got time for that. Nobody's trying to hear that, right? Now you might, if I sit down with somebody and I was talking to a friend of mine and we would go over her budget, and I'm looking at, okay, you're going to Olive Garden 3 times a week. All right. I didn't even say anything. I just looked at her and goes, I know, I'm sorry. And don't be sorry. I mean, just save some money. I don't really care. So here's the thing. I don't really care about budgeting. If you are saving 20% of your income, and if you tithe, you're tithing. I don't care what you do with the rest of it. Honestly, I think you need to focus on, because budgeting or focusing on lifestyle, you can't, what's the word, shrink your way to wealth. You have to focus on abundance. You have to focus on, how can I create more value in the world so that I can generate more revenue? And then you need to forecast and direct your cash flow where you want it to go. Okay, so that's a whole other talk. But what I want to talk about today are transfers of wealth. See, a wealth transfer, the third type of money, is money that you spend and give away, sometimes, most of the times, unknowingly, and oftentimes unnecessarily, right? And so the thing is, not only see, and you got to add on to the, our understanding opportunity costs, as we talk about the 7 principles of prosperity. Because if you give it away before you get a chance to put it to work for you, once the money is transferred, not only do you not have the money, you lost the opportunity for the money to make money for you. That's why it's so powerful. The first step is awareness. So I'm going to make you aware, and then you got to find them and eliminate them. So what I'm going to do is I have a really detailed report called Wealth Transfers that if you email me, I'll put in the show notes that you can download. It's about 15 pages, and it has a case study of looking at your personal economy differently, and how, without anything costing you any money, how you can find money to improve your personal economy. Okay. And so the top 10 wealth transfers are taxes, which I have as number 1. Some people say mortgages, but it's close neck and neck. Qualified plans. How you're taught to fund qualified plans. That is, anything over the match, folks, is a transfer. I'm going to tell you right there. I'll do a whole talk on it. In fact, if you go back to Kim Butler's show, we run the 401k through the 7 principles of prosperity. Okay. And you will see financial planning, the way it's been taught, can be a huge wealth transfer. Disability, if you get hurt and you can't work, that's, your most precious asset is your ability to make money. So you have to ensure that. Credit cards, are a big wealth transfer. Because if you're paying interest to use somebody else's money, I know people that I was looking at somebody's credit card statement. I mean, they had a lot. It was easily a good $40,000 credit card debt, and I showed them on their statement. They got a statement at the end of your statement. They had paid $4,700 in interest, and that was just on one card, and they had 3. So that was probably $15,000 of interest transferred away every year that you gave away, that you can't save. And of course, they weren't saving a damn thing, right? Tax refunds. Huge wealth. That's what we're going to talk about today. Owning a home is a transfer. I agree with Kiyosaki when he says your home is not an asset. I think it's important to have one, but an asset is defined as something that puts money in your pocket without your labor, without you working. Okay. What's a liability? Something that takes money out of your pocket. So when you look at a financial statement, and if you stop working, I'm talking about your residence, what direction does the money go? Okay. You got to light it. You got to heat it. You got to landscape it. Okay. It is a liability. Okay. You should have one. I'm not saying that. I'm just saying understand what it is. Okay. And life insurance, term insurance is important, but it can also be a wealth transfer because most people don't die within a term. All right. Buying cars, investments. Okay. Education. All right. Big ticket, major capital purchase. So these are transfers. So what did I say? Taxes, qualified plans, financial planning, disability, credit cards, tax refunds, owning a home, life insurance, purchasing cars, and investments. So these 10 transfers create financial losses for you. And so what you got to do is I would write those down. You got to study each one. And everybody doesn't have all of these, but you determine how they affect you. So on the surface, they can seem pretty basic, But it's not until you think a layer deeper do they become, uh, you know, the transfers they cause unintended consequences. All right, and so if you, I have so I have to try to link to it. There is a on our YouTube channel. I have a video I did a while ago called Demographics. But once you understand the future demographics of the country, we talked about this on the last, the 5 problems that we face. On one of the last podcasts, you'll see how the transfers affect you because see, most people think that the key to growing their personal economy is to find better investments that pay a higher rate of return, but it's actually more opportunity in minimizing your losses than there is to try to pick winning investments. So let's take one transfer. I'm going to talk about tax refunds. Everybody loves their tax refund, right? And so I just had I've sat down with 3 people of my existing clients and says, listen, have you ever heard of income shifting? And so there's a report. I'll probably put this in the show notes also. The IRS report saying that came out like 2004 or 5 called what is it called? I should pull that up. Let me see if I can pull that up. Big refund, big losses or something like that. And no, that's not what it's called. But the what it's basically saying is that 8 out of 10 families out there, people out there, have their W-4, their Form W-4. That is the form that tells your employer how much to withhold from your taxes. Okay, during the course of every paycheck. So that is your responsibility to fill it out. Most people don't even. They might do it once, and they've been working somewhere 10 years and they ain't never looked at it since, right? And they've had life changes. So one of the things that, let me see if I can pull this report up real quick for you. Should have had this set up. Wait, here it is. All right, a big refund. In fact, I'll send you this also. Right, so it says big refund. It's from the IRS.gov, right? Big refund, big tax bill, dated April 29, 2005. First, some refund facts. Federal tax refunds to individuals total more than $215 billion last year. This is 2005. More than 101 million taxpayers got refunds. That's 80%. The average refund was $2,126. Where does your refund come from? It comes from your wallet or purse. When you tell your employer how much to withhold from your paycheck, or you make an estimated payment for the average refund, that's about $40 a week too much. Now this is them, right? You might be using the extra withholding as a forced savings. Yes, that's what most people do. But Uncle Sam doesn't pay interest on refunds, except in special circumstances. But putting the money in any type of savings accounts or paying down debt might be a better option. Hey, guess what we do? And so guess what's the best place to store your cash? Permanent life insurance. So I help people find this money and we show them how to be the bank. Okay. So, or both, right? Paying the money in any type of savings account or paying down debt might be a better option. But not everyone gets a refund. And you got to do it right. So you want to, the good number is $1,000 or less. So I'll give you a little story. So I had somebody and I told them this last year and I said, I have a feeling they didn't do it. And so what I've started to do now is I'm starting to help people. When they come in, we going to print out a, W-4 and I'm going to make them do it. Cause what do I say is your money is not my money, but we're going to go down the list. So usually when people do this, say, well, I'm married, I've got 3 kids, and I got 4. So this person made like 110,000 with overtime, and they must have brought home 60, And not only do they had a lot of money taken out, they had an extra 20. So on the form it says, would you like to add any extra money? So you add an additional $20 because in their mind it was a savings. Okay. And I said, well, it's the way how I save money. I said, okay, how much interest are you earning on that money? Mr. It's my savings. And well, none. And when you get the money, what do? Oh, we spend it. We pay bills. We save it. We go on vacation. You give it away as soon as you get it. Okay, so you give up control of it, making no interest. Give Uncle Sam an interest-free loan. So you're supposed to pay. I ain't saying not pay taxes, right? Render under Caesar what is Caesar's, as once said, right? So you want to pay, but you don't need to leave a tip. Okay, and so go down your W-4. So he had 4. If you just go read the work, if you ask me, I'll put a link. I'll send you a video. I actually have an affiliate program called My Econ where that's the core strategy that we teach, is how to do that and actually how to share that with other people. But you go down there if you've got any type of business. So if you go down the list, most people when we add up all their stuff, what I find, if you got kids and y'all work, it's usually like 7 or 8 is what it's not, people look at your exemption and say, well, all right, I've got, I'm exemption, I got wife, I got 2 kids, I got dependents, and they'll put 3 or 4, but that's not what it's about. It's about allowances. Okay. And so you need to just take your time and read the worksheet. Okay. Now, if you just do the first page first, I just did one with a young guy. They didn't really have any kids, house or whatever. So he had 2. We just bumped his up to 3. Was it 3? Yeah, it was 3. And he had 2, but he had a business that we'd helped him set up. So you can do adjustments on the back page on line 4, and just being conservative without even adding up your expenses, you could do 4,050. That you'll definitely get, and for every 4,050 that you put on the worksheet, that's a good for 1 more allowance. So that added up to 3. So I said, all right, turn it in tomorrow, and you'll see. I told you, look, I want to see your current paycheck, and let's look at your other ones. So this guy had 7. Didn't have a business, so I'm sure we could squeeze out 2 more based upon his overhead, where he would have like 9 or 10. And so if it could out, this person was getting back like $12,000. I said, well, all right, let's say I don't kill all your joy. And how about you only get back 10? I mean, 2, right? That's like, what is that, $800 a month? I said, well, would an extra $400 a check help you guys? Well, turn this in the morning, And so, because, what happens is, a lot of people, you're getting this, but you see, you got to go back. You got to understand how money works. You need to put your money to work for you during the course of the year. So, folks, here's your homework. All right. Print out, go to search W-4 withholding form. It'll come up in a PDF. Print it out and just take your time and read it. There's a bunch of videos on YouTube on how to fill this out properly. But I'll send you a good one if you email me at kurtmay@gmail.com. And so that is step 1. First, go figure that out. All right. So now let's go back to transfers. Okay. And I'm going to close with this. So let's say there's different types of planning available. So I want you to write on a sheet of paper, IF, BS, and IS. Okay. So IF is a initial for investment fund, right? So let's say you had 80,000 in deposits, 6,000 in earnings below the deposits, right? And $4,800 earnings after taxes and fees, right? And so and then underneath that, I want you to write BS, bank savings. So now, in order to get the same, at 80,000 at 7.5%, where do you get that? Well, that's another story. But assuming if you got any decent investors, you can earn 7.5%, right? So if you have you would need to earn $6,000 a year and you had it in a savings account, you would need $600,000 at 1% to get that same $6,000. Okay. And then you still have to pay, if it's in savings, you still have to pay taxes, on the interest. And so after possible fees, you're going to net $4,800. Okay. So, and so what I do is I help people with internal savings, right? So what if I could show you how to get 6,000 in earnings, net $6,000 with no fees, with zero deposits? Which one of those would you rather have? So let me tell you what I'm talking about, right? So that most people are getting, sold stuff. All right, well, listen, if you gave me $80,000, we can get you this, and you're going to net $4,800. Or if you go to the bank, well, if you'll give me $600,000, I can net you $4,800 on $600,000. Are you crazy? All right. So what if I come to you and say, well, all right, I'm going to teach you about the transfers that you're losing every day unknowingly, unnecessarily. And we're going to go through that list of the top 10 transfers. So let's say you make $75,000 a year. And let's say you're saved $5,000 a year. So you're saving $400 a month, right? So that's $5,000, right? And now, instead of focusing on how can I show you how to do, make more money with this $5,000, what if I look at the $70,000, right? So looking at the $70,000, we adjust your withholding, we raise your deductibles. There's a bunch of ways to free up some money. And so I just found 1%, $700 a year. What's that, like 60 something dollars a month? And do you understand, if I took that $700 and added the $700, because what I ask people, if I find it, we save it. So I took the $70 from the transfers, and I was able to add it to your $5,000 in savings. That is a 14% increase in your savings without market risk, penalties, fees, and spending one more dime out of your pocket. Think about this, folks. Is this the type of financial advice you would like to pursue? See, lead with transfers. Find money that you're losing unknowingly and unnecessarily. Look at, stop leaving Uncle Sam a tip. Are you adding extra money and you're paying bi-weeklies, or you're adding an extra $50, $100 a month to your mortgage? Stop doing that, especially if you don't have any money saved up. Okay. You could raise the deductible. There's tons of ways. So if you'd like you can go to my site, click a 15-minute appointment, and I'll take you through a quick analysis, and I'll show you how to identify some of these transfers in about 15 minutes. I'll show you how to do your W-4 right. So if you've got any questions about that, I want to keep this call short and sweet. Email me. Hopefully by the time this goes up, I may have even created a web page for this report. But I think you'll find the report very, very cool. I maybe put a little video up to go with it. So, because a lot of this stuff is visual, sometimes you don't want to. It's hard to visualize numbers on a podcast. But the first step is awareness of the transfers that are in your life, and to begin to look at those. There's also some stuff in lifestyle you could analyze yourself. Or I'm going through a bunch of, in lifestyle money or business expenses of things. Do I need this software? Am I paying for this? I'm trying to figure out how to get rid of cable. And the only thing I want to watch is my 76ers. After the Super Bowl, I may cut it off, and then all I do, you watch Netflix, and Hulu. I can watch wherever I want to see on my Amazon TV. So, save myself some money. So look at what you're doing. Don't just have stuff, your kids, kids need to be reading a book. So you need to cut the cable off. So listen, I hope you guys are, as I record this, we're ending out January. Are you on plan? Are you on your goals? I'm very excited. I looked, I'm ending up the month. I'm still here at the office as I record this, and I'm excited because I'm on pace. I hit my, my January goals in terms of what our business, what we want to get done, in terms of activity and client, adding on new clients, which is I'm excited about, and because I did it at 5 o'clock and I hit the number I wanted to hit, and then I've started delegating. One of my things, we remember I talked about on your goal is, I've read 3 of the books that I wanted to get into of what I laid out there. I'm excited tomorrow. I'm going to a really cool mastermind that I'm excited about, to meet some new people and learn about some marketing things. So remember, it says you got to, on purpose, figure out the events you want to go to, how to get yourself in the right room, what are the books you're going to read. If you're in business, how many clients that you want to serve. What is the team that you need to build? See, folks, don't let the year go by. You got to you got to get what you want to get out of this stuff. Are you working on personal development? I've been sending out, I think I missed it this week, so forgive me. I got to get somebody to do this for me. So I got to start delegating this. But, are you listening to a Jim Rohn today? Jim Rohn, R-H-O-N, on YouTube, and getting yourself working on as Jim says, the winds of opportunity blow on us all, but the key is to set the setting of the sail. So you've got to work on your mentality, your skill set, your mindset, and your network. You've got to focus on how can I set a better sail? And I don't look for people outside of me to solve my problems. As Jim would say, don't wish it was easier. Wish you were better. Make yourself better. You don't even need to wish. You can make yourself better. There's nothing new under the sun. There's books, there's podcasts like this and other ones. There's Audible. Get out there, folks, and go win. Okay, make yourself, the friends say, anti-fragile. So with this, folks, Curtis May, I thank you so much for listening to the Practical Wealth Show. And guys, I will see you at the top. So I wish you prosperity, and we'll talk to you next week.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.